My friends, by the time you are watching this, I will be sunning myself in Thailand, enjoying the sights, the sounds, the tastes, and of course, I'll be knee-deep in Bangkok ladyboys. But I wouldn't leave you hanging without giving you some content while I'm gone. So October, as we know, was a bit icky on the trade front. Well, until the end it was anyway. However, November has been a blinder already, so I'm pleased to tell you that we are bringing you another trade recap. Some other big news is that I've ditched the 5 seconds for entries and I'm now going back to the old days of the 1 minute entries. But I am using a different confirmation style, which I may or may not get into in the following video presentation. So sit back, sip your cocktail, and bask in the glory of this week's video. Okay, so let's get into this trade recap. It's from EURUSD on November the 2nd, which was a Wednesday, and we're going to start on the 15-minute. So what we've got on the 15-minute is we have major bearish structure. This is the high, then we have a break of this major low and close below it. Okay, we then cement that low, candle closes above the candle to its left. Okay, so we've got a high and a confirmed low here. We then fail to close below that low. What does that mean? Well, it's a failure to close, or in other words, a sweep of that low. And what does a sweep mean? Well, it means the high that caused the sweep is weak. So this is our weak high. So at this point, longs are valid, even though it's counter trend, because this high failed to close below the low. Obvious, okay? Now, so longs valid along this with the order flow. What else do we have? We have internal structure before a chock. Our definition is of structure is internal structure. And you can see there's no chock to the left. So we create a valid high and a valid low. Come down, actually fail to mitigate the discount of this. So that is left open for business, okay? We then push forward. So this is a minor break structure, minor internal break, because that failed to mitigate the discount. We then have this next leg of internal structure here, which breaks up and mitigates something in the discount here, but kind of taps an invalid zone. It's a bullish candle, it just taps the body of that, so not really a valid zone. Either way, it still does tap the discount, so we can say, right, that is a major re-establishment of order flow. However, that discount is still open for business in this situation. Then price pushes up, comes down, reacts to the extreme of this low, but then comes down to that open for business discount down here, taps something, and then pushes up. So we can now say that this discount is fully done with and business has been carried out there. Price then pushes up again, breaks and closes above this high, and finally we get a mitigation of this discount. Again, doesn't really tap into a valid zone before breaking up, but then that break up, we get another sweep. And this sweep also sweeps that high that was weak. So again, okay, has price done its job here? And now we can see that price pushes down. And what happens next is we get another sweep of this low down here that failed to close above this high. So if you're following this, excellent. So then we push and sweep that low. So now this low is weak, and then we, this high becomes weak, and then what do? We also sweep that high. So now this low becomes weak, okay, and then we break that low. Now, at this point in time, am I still interested in longs? I have to ask myself questions, okay? So it's okay, we have tapped into the premium of the overall major leg here to the left, but have we tapped a valid zone? And the answer for me is no, we've just tapped imbalance. And for me, imbalance And yeah, I know a lot of people trade imbalance these days. For me, it doesn't work with my idea of supply and demand. I like zones, supply and demand zones. Fair play. If it works for you, then it works for you. But for me, it's so okay. We still have this area below that's open for business, and we still have expectations to push higher here. Okay. So with that in mind, we could look for longs when price gets to this area down here. Now, with getting into now the 1 minute entry model, now this is one of a few entry models, and this is the very most simplest one that I'm going to go into in this video. The other ones are all available in the course, Magic FX Academy, and or in the handbook, the strategy guide, which is a PDF available in the description if you look at the links in there. But this model I will go into, and it's super simple, and it kind of follows the main concepts behind Magic FX and goes within that in terms of structure, because we know that we consider our swing structural highs and lows with candles that close for a low above the candle to its left and for a high below the candle to its left. Okay, so those cemented candles show strength in structure, show swing highs and lows. So simply what we're waiting for now is for price to tap into a really valid zone. So the work has already been done by refining that zone down. Now we want price to tap in to that zone, cement a 1 minute candle, and then we're basically ready to enter. If that cemented candle has a small enough stop loss to enter on the close of that candle, great. Otherwise, wait for price to pull back, give you a small enough stop loss, say you want a 2 pip or 1.5 pip, whatever you want, and then hit enter on the trade, and you're in. It's so simple, and it's really, really effective. Okay, but as I say, you really need to be educated on what zones are the ones you can take it off, because obviously you're going to get cemented 1 minute candles all over the place. You can see millions within this. It's not something you just want to play around with. You've got to be really picky with the zones, okay? Much like you would have to be by entering on the direct 5 seconds as well. So we've tapped into this unmitigated internal 50-minute discount. Now we go on the 1 minute and see if there's anything in there that makes sense to take a trade from, okay? So now look at that. This is that 15-minute leg represented on the 1 minute. Okay, so we have from this low to this high. And on the 1 minute, what do we have? Well, we have within this substructure, as you can see at the bottom here. Let me just get rid of this. We have a chock. We have low, high, low, break of that high. So that's our first chock. And then we cement the high here, giving us our first substructural leg. We come down to the discount of that first leg, mitigate this zone at the bottom, and continue to push up, okay? So substructurally, this first leg is dealt with, closed for business. Next leg cements the high up here. And quite clearly we can see that that did not come down and mitigate this discount. So this discount is open for business. Okay, fantastic. Now within that, is there anything else we can do? Yes, we can look at the internal structure within the substructure. So before anything else, we can look at, we have this first leg of price here that is mitigated to this extreme wick is mitigated. We then push up, cement another high here, come down, tap into something in this internal discount, and then continue up. So we also have a 1 minute internal leg within this substructure that is also unmitigated right here. Okay, so really we're kind of looking at, you know, this potentially as a zone. Down here, these wicks look pretty good. You could, you know, cover all this whole area. This is whole kind of buy, sell to buy area. I'd probably go for just wicks on this inside bar kind of zone here. Anyway, what we'll do is then drag that out and see if we get reactions from it. And if we get our cemented candle, that, you know, we've got one zone here that we're looking to buy from. If we get reactions from anywhere else, we want more, and that's where the other entry models come in. But in this situation, we can take that simple entry model from that, okay? So does price come down? Well, it certainly breaks this low over here. Look at that, broken right through, and pushes down. And right, we can see that. Okay, so we get a cemented candle here. Now, is this enough? This would be the entry model, right? Cemented candle. Well, yes, it would, but what have we tapped into to the left? We haven't tapped our zone. Have we tapped anything at all? And the answer is that we've just tapped into this imbalance. What did I say about imbalance earlier? I said that it is no good for me. I don't take trades from imbalance. So I wait. And if it goes without me, it goes without me. That's fine. I'll look for a different setup further down the line. Okay, and you can see that gets taken. So we have minor. Well, it's minor structure technically right here. Okay, so now, oh look, our zone gets tapped. Okay, great. Do we get a cemented candle? If so, I'm ready to get involved. And that's all it takes. So yes, we have our cemented candle here. The candle close would be 1.9 pip stop, 1.8 pip stop. I wonder whether we can get a 1.5 pip stop loss covering that low. And we do, price tags us in and continues up. Now, as you may or may not know, 4R is risk-free for me. I will take 20% off at 4R. Do we get that? Price comes back and shoots up there. So we get risk-free from that, which is fabulous. Okay. So now it comes into the management side of things. And if we're looking on a 15-minute, what am I expecting? Well, I'm expecting that this high did nothing. Didn't mitigate anything valid to the left, so I'm expecting a break of that at least. So that could be your final TP, 36R. That's great, especially as it's FOMC this evening. What I would do, and what a couple of people did in Magic, I believe, was to take a pretty heavy partial here, because it is really not clever, as you'll have learned from my past videos. It's not clever to leave trades running through big news things, but if you wanted a bit of fun, you'd leave maybe 10% partial running and see what FOMC did with that. Okay, so if we continue to look at price and just confirm that was very close to taking us out here at this point, but actually just stayed in, just came to sweep that inside bar and mitigate this extreme wick down here. So very close. But now if we look on the 15-minute, you can see, well, okay, FOMC happened at this time here, so I forgot it was an hour earlier this month due to the clocks going back in the UK but not yet in the US. But yeah, so you may have taken that, forgotten FOMC was at 6, and then just it blasted up and you'd have been laughing. Could have gone the other way, but this is one of those times where, you know, it would have done you a big favor, and you could have made a good, if you were targeting this structure here, it would have made you a good 60R. A sensible target for me would have been to aim for, well, the most sensible target was this high for 36R. You know, it just made a lot of sense for price to come higher than that. But also, if we're expecting a mitigation of a valid zone, I would take it up to here, okay, which would make sense, because just remembering we are technically bearish overall. So, you know, expecting it to break this high would not be something on my list of things. As much as I'd love to say, yeah, I'd aim for the top of that, blah, blah, blah. But no, that wouldn't make sense to me. And ultimately price swept above this, tapped some sort of unmitigated premium above here. I think there was like Asia highs here or something as well. Yep, there was some unswept Asia highs here. And price just swept all that stuff, and then after this shot down. There was no short trade for me here, unfortunately, plus it was, you know, very late in the evening at this point. But yeah, that is kind of the trade recap, little entry model there. And yeah, the 1 minute cemented candle, it's good stuff. It's probably the simplest, it's the simplest entry model that I can imagine. If anyone can beat that for an entry model, then be my guest. I guess a simpler entry model would be closing your eyes and pressing market execute, maybe flipping a coin as to whether you sell or buy. But yeah, that is it. So GJN to all the long time listeners, and be back next week with another pre-recorded video, because obviously I'll be in Thailand. Yeah, hopefully I'm not don't get eaten by sharks or killed or locked up in prison because drugs have been planted on me, or I get kidnapped or anything like that. Hopefully it's a good holiday. But yeah, see you later.